Equities are rallying on Monday on news that a potential vaccine could be in the works of being developed. Joining me to talk about the market and the latest news is Peter Schiff, CEO of Euro Pacific Capital. Peter, welcome back to the show. It's a pleasure.
Oh, thanks for having me on again.
The S&P 500 is up almost 3.5% on Monday's session following news that Moderna has reported good results of their phase 1 clinical vaccine trial. Peter, this is the most we've seen the S&P rise in almost 6 weeks. So what exactly are investors pricing in right now?
Well, I think that people are looking for a reason to buy. I mean, it's very, unlikely that this particular vaccine is going to work. I mean, who knows? Maybe it will. But there's a lot of success in early trials, and then these things don't pan out. But I think what's really driving the market is the Fed. You had Powell on 60 Minutes last night, basically committing to print an unlimited quantity of money and urging Congress to borrow and spend as much money as they want, and that the Fed is standing ready to monetize an infinite amount of government spending. So I think people think that that's good for the market, but it's not. It's a disaster for the economy. It will destroy the value of the dollar. And sure, that means that stocks will go up. But so what? If you're pricing them in worthless currency, in fact, there is a limit to how much money the Fed can print, and that is when it collapses in value. What's the point of printing money that doesn't buy anything? I think we're going to find out pretty soon.
Now, I know you've said before that the Fed really has started making mistakes before the crisis began with lowering rates when they shouldn't have. Now, what really, in your mind, should have been the correct response during this pandemic that Powell should have taken?
Well, had the Fed been doing the right thing all along, the economy would have been able to withstand the pandemic and would have been in a position to allow the government to do the right thing, which is to dramatically reduce government spending. That's what's needed. And to the extent that we need the government, if you believe that we need more government, it needs to be paid for by taxation, not by inflation. But the problem is nobody has any money. Everybody is broke. Everybody is leveraged to the hilt because the Federal Reserve has made one mistake after another to inflate one bubble after another. And this particular bubble was already deflating before the coronavirus pin put a gaping hole in it. And now the air is coming out much faster. And all they can think of is, how can we fill it back up again? How can we reflate a bubble? And it's going to be impossible. I mean, they shouldn't even be attempting to do this, but they are doing it. And I think they're going to destroy the dollar in the process. What people really need to be vaccinated from is the massive inflation that the Fed is going to unleash.
We're going to talk about inflation data in a minute, Peter, but just hypothetically, if tomorrow a vaccine were to be delivered and everybody could be declared healthy again, could we still see businesses return to normal right away? Just last week, JCPenney, one of the largest retailers in America, filed for bankruptcy, and that's joining a host of other big companies filing for Chapter 11. So is the business landscape changed forever? Have we gone past the point of no return already?
Well, first of all, what we had before COVID-19 was not normal. We had a bubble. And if the question is, if we had a vaccine so that people would no longer catch COVID-19, could we go back to that bubble? And the answer is no. I think that bubble has already popped, and I don't think there's any way to reflate it. So I do think that we could have some type of recovery, but we're not going to recover back to the way we were. I mean, we may succeed in temporarily recovering from a depression to a recession, but then the economy is going to roll back over into depression. But what's going to make this depression particularly painful is going to be the rapid escalation in the cost of living. So it's going to be a combination of much higher consumer prices and ultimately long-term interest rates, as well as unemployment and a weak economy. So we haven't experienced anything like this in the United States. They've experienced it in other countries, but we're about to experience it in a big way.
And how is the dollar supposed to respond to unlimited quantitative easing on this scale, Peter? Where can we expect the dollar to be next year?
Well, I think the dollar is headed much lower. Maybe it'll get there in less than a year. There's no way to tell for sure. I mean, the dollar is already defying gravity. It should already be coming down, but it hasn't. But I think once it starts to fall, it's going to implode. And of course, you can't wait for that. In fact, former Fed Vice Chair Alan Blinder was on television today saying that, well, he was concerned about the skyrocketing deficits, but right now he's not seeing any signs in the bond market or the foreign exchange markets that would suggest that it's a problem. And so, it's okay. But, if you wait for a sign in the market, then it's a crisis. I mean, once the dollar crashes and the bond market crashes, and now you get the sign that you've been looking for that the deficit is a problem, it's too late. You can't wait for a crisis to try to come up with a solution, because by then there is no solution.
Some people have defended the Fed, saying that we're in a period of inflation and that money printing really is essential. And you've countered that argument by saying that the CPI really isn't telling the whole story. So how do you see it? Where is inflation really at right now?
Well, it's at an unprecedented level. I mean, inflation is the expansion of the money supply. That is the definition of inflation. You expand money supply, you inflate money supply. And we've never seen inflation like this. Money supply is growing at the fastest rate in U.S. history. I think year over year, it's up about 25%. Look at the Fed's balance sheet. It's just skyrocketing. And of course, most of that increase in the money supply happened in the last 6 weeks, not in the last 52. And the amount of inflation that the Fed is going to be creating in the weeks and months ahead is actually going to be greater than the amounts that it's already created. This is never a good thing. Inflation is a tax, and it's the most vicious tax because it hits the most vulnerable. It hits the lower class, the working poor, people who have savings. It destroys the value of a lifetime of savings. It destroys the value of the wages and salaries that people earn. We're paying for government through inflation. Literally right now, half of every dollar the government is spending has been borrowed, right? We're borrowing right now as much money as we're collecting in taxes. And soon we'll be borrowing more than we're paying in taxes. But since the Fed is monetizing most of that debt, the American public is going to pay for all that government through inflation rather than through taxation. And believe me, when you pay for government through inflation, it ends up costing a lot more than if you honestly paid for it with legitimate taxes.
So how bad could inflation get? Can we see potentially hyperinflation like we did in the early 80s?
Well, we didn't see hyperinflation in the 80s. I mean, we're going to see inflation much higher than what we saw in the 70s. And of course, the CPI is very different. The one that we have today doesn't measure prices the way it did back then. I mean, if we had a more honest CPI, it would already reveal a price increases that are much higher than what the government has been admitting to. But even based on the way they're measuring them now, we're still going to take out the levels that we saw in the 70s. The question is, will it go from very, very high inflation to hyperinflation? And the jury is still out on that. It is very possible that that's where we end up. But in order to avoid that fate, the Federal Reserve is going to have to do a lot of things that up until now it has resisted doing because of the terrible immediate consequences. What the Fed would have to do to avoid hyperinflation is allow interest rates to rise sharply, even though the economy is in recession. And even though the stock market is tanking, the real estate market is tanking, banks are failing, companies are going bankrupt, and the government is not going to be able to pay its bills. The government won't be able to make interest payments on the national debt. It won't be able to pay Social Security or Medicare. And the Fed is going to have to sit back and allow all this to happen and refuse to bail anybody out, because that's the only way to escape hyperinflation.
Now, I know you've never really been a fan of big government. So all that stuff you just mentioned, Medicare, insurance, should that really be left to the government, or should the private sector be dealing with their own problems right now?
Well, the biggest problem the private sector has is the government, and it's been the government for a long time. I mean, the government got involved in areas of the economy that it never should have been involved in. I mean, constitutionally, it didn't even have the authority to involve itself. But unfortunately, we've made that mistake a long time ago, and now we are dealing with the consequences. And politically, it's very dangerous because this most recent crisis, the government is using this as an excuse to really advance their socialist agenda in ways that they couldn't do with climate change. This has been a bigger boogeyman and has been allowing even more government. I mean, even the Republicans have sold what was left of their souls, and they signed on to the CARES Act and the PPP and all these socialist programs, and they've really dramatically increased government. Now you have this HEROES Act that right now the Republicans are claiming they don't want to sign on to. We'll see how long they can resist this. But I think that the problems are going to be blamed on capitalism once again, like they were following the 2008 crisis. This is an entirely government-made problem by the Federal Reserve, by Congress. It's the byproduct of artificially low interest rates, central planning, government regulation, government spending, taxation. But I think the public is ready to blame or throw out capitalism completely and go all in on socialism. And then we're really going to feel the pain.
Now, it's been 2 months since you've been on the show last, Peter. During those 2 months, how would you rate our government's performance? If you look around the world, take a look at Sweden, for example. They've abandoned the close all shops model, and instead they've allowed businesses to run, but at the expense of public health. Sweden, for example, has one of the highest infection rates per capita in the world. Should we have followed that model?
Well, I don't think statistically the infection rate or the mortality rate is actually that much higher. In fact, when you factor in other variables, you'll find that there are plenty of countries that have had lockdowns that are actually doing worse when it comes to the health impacts. But the jury is still out. I mean, let's see what happens later in the year or next year. I mean, they might be building up immunity there in Sweden. They may have a much better 2021 than a lot of other countries that let their immune systems run down by sheltering at home. But the other factor is the cost. I think Sweden did a real cost benefit analysis on how to approach this because there was no one to bail Sweden out. I mean, if Sweden was going to destroy its own economy and spend a bunch of money, it was the Swedes that were going to have to pay for it. The problem here in the United States is you have all these governors who are imposing all kinds of draconian requirements, not caring about how many businesses are shut down, how many people lose their jobs, because they think Washington is going to pay for it. They think the Federal Reserve is going to bail it out. So nobody is weighing the cost. They're just looking at the health benefits in isolation. And I think we're making a lot of very bad decisions. And ultimately, we could do a lot more to destroy the health of our people by destroying the economy to an even greater degree. And of course, I don't even believe a lot of these statistics. There's a big difference between dying with COVID and dying of COVID. If pretty much anybody who happens to have COVID dies, and now they're going to say, well, this is another COVID-related death, I don't even know how much you can believe these statistics when the people who are dying of COVID are generally in their 80s, and they suffer from all sorts of other comorbidities that are just as likely to have been the cause of death. In fact, maybe more so than the fact that they happen to have COVID when they die.
Now, looking ahead, Peter, at the elections in November, how do you think this has affected Trump's chances? I've heard two arguments here now. One, which is that it's very difficult for an incumbent president to win during a recession. And the counter argument I've heard is that if you actually look at all the states that have reopened their economy first, they've been mostly Republican states. So clearly Trump's desire to reopen the economy soon is resonating with a lot of the constituents. How do you see this panning out?
Well, I always thought that Trump was not going to be reelected because I didn't think that the economy was actually better than when he came to office. And so I thought a lot of the people, especially a lot of the Democrats in the swing states who voted Trump, were not going to vote for him a second time. And so, the economy is actually going to be weaker than I thought it was going to be going into the election. But the only chance Trump has is if enough voters don't blame him. If they blame the virus and somehow believe that but for the virus, everything would be fine, and that once the economy returns to normal, it will be fine. That's his only chance. I mean, I thought initially his game plan was going to be to blame the Fed for the recession and run against the Fed. Now he can blame the virus. And so that might be, a better strategy as far as the way it resonates. I don't know. But if I were still going to say it from here, I think Trump loses, even though Biden is a really, really bad candidate. I mean, if the Democrats can actually succeed in switching Biden for somebody better, then that would even improve their chances. But I think as flawed a candidate as Biden is, I think in the depths of a rather severe recession, I just don't think that he's going to get reelected. And I actually think that the Democrats are going to take the Senate as well. And so there's a real threat here that if you think government is big now, and if you think the deficits are big now, wait till you see how much bigger they get when the Democrats have complete control and there's no Tea Party to lean against the spending. Obama had to deal with the Tea Party. The Tea Party is long since buried. I mean, the Republicans are now the Democrats, and the Democrats are socialists.
Yeah, so the Democrats come to power, like you just said. Could the tax cuts be reversed? Can we see big businesses be sort of diminished by the power of the government? How will the stock markets respond?
Well, look, the stock market should be going down. I think they will be going down. I think the only reason the stock market may go up is because the stock market may go down less than the dollar. And so if the dollar is sinking at a faster rate than the stock market, then the dollar price of stocks could go up. But in terms of gold, in terms of real money, the stock market is going to plunge. I think we're going to see a complete collapse of the value of U.S. stocks priced in gold.
That leads to my final question, Peter, is that in light of everything we've just discussed with your prediction on inflation and the government's changing power, where should investors be going right now? What are the safe haven assets that you're looking at?
Well, I think gold is a safe haven, and I think so is silver at this point. I think there's an incredible bargain in silver. We may have seen the lows now. Silver got down to a record low. I mean, ever since they've been keeping records, which goes back a long time when it comes to gold and silver. You're talking hundreds, if not thousands of years. Silver was the cheapest it's ever been in terms of gold. And so we may have seen the lows and rallied off the bottom, but I think there's still a lot of legs in the silver rally. But gold's going a lot higher too. For those people who are willing to take a chance, gold stocks, I think, represent the best risk reward out there as far as, trying to make 10, 20 times your money, maybe more. I think the way you can do that is in the mining stocks. And so, we've been putting a lot of client money into gold mining stocks, both in the accounts that we manage and in our mutual fund, the Euro Pacific Gold Fund. So I really think that that's where the speculative money should be at this point, in these mining stocks and junior mining stocks in particular, where you have the most upside if you know what you're doing, which I think we do when it comes to picking them. But for more conservative investors, in addition to having an allocation to physical gold and silver, you should invest in countries that have much sounder economies, that aren't destroying their currency to the degree that we are. So you'll be able to get more reliable income streams. And a lot of these dividend paying stocks in some of the good markets around the world have come down due to the COVID related crisis that has impacted the entire world. So there actually are some good bargains around the world on dividend paying stocks. There's no bargains here in the US. I think stocks are still overpriced. In fact, probably more overpriced now than they were before this COVID crisis began. But that's not the case with many of the markets that we're investing in Singapore and Hong Kong, in New Zealand, even in Switzerland, in Norway, Sweden, as you mentioned. There's some good buys there. Australia, too. There's stocks that we're getting involved in that I think will be good inflation hedges that will provide our clients with meaningful income streams that will actually go a long way in the States, because I think most people are going to get wiped out with the inflation tax. I mean, all of this government is not free, right? This incredible increase in the size of government is going to cost somebody. Somebody has to pay the bills for all the bailouts and all the stimulus. And if we're not raising taxes, then how are we doing it? We're financing it through inflation. And that doesn't mean we get it for free. It just means that anybody who is foolish enough to hold US dollars, either in savings or in the form of bonds or other fixed income investments, or even any income-oriented investments where the income is US dollars, you are going to suffer. And if you have a job and you're getting paid dollars, you're going to suffer. So what you got to do to mitigate the damage, right, your share of that inflation tax, is before the dollar collapses, get rid of your dollars and use them to accumulate real money, gold and silver, or to buy quality income-producing assets in other countries, so that you don't end up paying that inflation tax, but other people are going to pay it, and they're going to pay it through the nose.
I think last point, Peter, I think a lot of people are forgetting that in foreign currency terms, in a lot of countries, gold has already reached or is near all-time highs in foreign currency terms. It's just that in the U.S., in dollar terms, it hasn't reached that 1920 level yet. Can we see that happening anytime soon?
Yeah, well, I mean, basically what's happening is that all currencies are losing value, right? And you can see that in terms of gold. It's just that right now, the dollar has lost less value than other currencies. And that's why those currencies are already at record lows in terms of gold, but the dollar is not. But the dollar is not far away from a record low. I mean, maybe another 10, 15% decline, and we'll be there. But I think once the dollar starts to fall faster, than other fiat currencies, which is ultimately going to happen. In fact, I think the dollar is going to win the race to the bottom, which is a race that you don't want to win. But I think once we take the lead in that race, that's when you're really going to start to see the gold price moving, because gold does a lot better when the dollar is the weakest of the currencies. So if gold is this strong when the dollar is less weak than its rivals, imagine how much stronger it's going to be when it's the weakest one. And ultimately, I think what's going to happen is the dollar is going to lose its status as the reserve currency, and the world is going to return to gold being the primary monetary reserve. And the currency that has the most to lose from that switch is the US dollar. And all American citizens who have built an entire lifestyle and standard of living on the dollar being the reserve currency, so that we can just create them out of thin air and we can use them to buy all sorts of things that we don't produce, and that we can continue to borrow money that we didn't save and push off the costs on the rest of the world. And that is what we're doing now. And we think we can do that with impunity, but we can't. And what's going to take away that punch bowl is going to be a currency crisis, which will also mean a bond crisis. But when that happens, right, it's the dollar that really gets killed. And so it's Americans more than people anywhere else that need to be buying gold. I mean, everybody should be buying it, but especially people who have US dollars and who live in the United States.
Peter Schiff, great thoughts as always. It's a pleasure to have you back. Thanks for being with us today.
Sure thing.
And thank you for watching Kitco News. We'll have more for you, so stay tuned.